Turning points in markets. How do you identify them? In this video, I'm going to do a quick explanation of the easiest way to identify a turning point in the market, a significant week, how to go about it without any indicators, without reading the news, just looking at charts. So I'm going to go through a couple charts. I'm going to run through them, how to spot these significant weeks. So first off, we've got gold. Gold has been bearish since the top rate. You could argue since late January, but for me, the confirmation of this was this candle, a big full body candle, and that is what you call a market structure break. So a market structure break is simple. If you have a high, the low before that high, as in the last red candle before there, boom. That is a market structure break. That to me is a bearish confirmation, especially I reckon if you put on the volume indicator, you have high volume there. That's like another confluence you can use if you do want to add it. But that, as you can see here, you could probably make a good argument. Okay, cool, I'm going long gold with, I don't know, bullish market structure. So maybe exited there, and you got back in here. So you got back in there, and you exited there. So a nice trade there to there. Easy way of doing it, right? And it's not much management. It's an easy way of doing things because these are significant points. It's classic charting, no indicators. We'll even go back down. Gold, we can go to kind of this zone. So here we have, you could say, market structure break there. They don't always work. Remember, they're not predictive. Did we have one there? Let's have a look. Yeah, you could say we had one there, but then we had another one. And then we made another low. Well, we made a low there, high there, and you could argue, bang, back in there. And let's have a look. Let's just put the thing on. You could do easy system idea, stop loss below, high there, didn't break it. Long there, you can argue we exited there. That is a 4-hour trade over quite a while. So over about 9 months or so. For just a 4-hour trade, you could easily argue like that's rubbish. Like why would you wait that long? It's the easiest probably 4-hour trade you'll make. No management. You put on the trade, you stop, you wait. You could also maybe add size to it, a bit more advanced, but yeah, the easiest ways to spot turning points in markets. Now we're on Bitcoin. Let's go to here. You could say, set that high, took it there, bearish there, broke above it, and then when we broke through there, you could argue we have been bearish ever since, and we're actually now we'll be looking for on Bitcoin a close above there. Did we make a new low there? No, as you can see, you've got to be quite tight, quite looking over sometimes. But as you can see there, look, bang, high there. So Bitcoin, I'd be looking for there. And then if we go to let's go to maybe 2023, kind of coming out of this zone, you could argue set a high there, broke structure. Okay, cool. We're looking for a break above there, long there. Let's say here, we'll do the same again. See what this turned out to. And then you long until here. There, 7-hour trade, right? So you could argue that was obviously close, but no. So yeah, 7-hour trade there on Bitcoin. You are going to get chopped up in zones, but you could go made a low there. We're waiting for a weekly close above there. Got one there, and we would have longed till around here, which is a sharp move. You're not going to get the biggest returns by doing this, but it's just an easy way of, even if you're not trading, you're just observing a chart. You can think, okay, cool, I'm just going to sit back, watch, see what happens. So you could say, we'd be looking for a close below there on stocks right now. So this is actually quite interesting. So we had those consecutive weeks. We set that low there, and we've just gone up. We're consolidating here. So you could even argue if stocks drop into like this zone we're actually fine because we haven't closed below there. Or you could even argue if stocks could maybe drop, and then that could be like new support. These sort of things obviously come into play, and then we could have like a consolidation before going up. Could be a factor if we go back down. If we go to here, we had a low there. You would have been out before all the tariff stuff. I'm out there, bang, and I'm back in on that weekly close. Let's do another one. It's the easiest way to spot turning points on the high time frame. Where we would have been out here. They are. Nice trade there. These are weekly charts. These are going to take a long time to play out. So, yep, you're probably thinking, why do I want to wait that long? As I mentioned, this is just a way of identifying turning points. I wanted to bring NVIDIA on because, let's have a look here. You had a market structure break there, close there, close there. You could then, did we have a close there? That weekly candle, and you would have had a pretty monster trade. Let's go on there. You could have been long until there. So a bit of a bigger one for you. 20R. And obviously that was a historic move and a huge move by NVIDIA. But the same applies. Apple, I wanted to actually go a bit further back on Apple. There we are. We'll go to COVID. High set there before that low. Structures broken. Let's just go for here for just to be quick. Longed Apple until what there. You can see there though, price, you would have exited there, got a nicer one, price kind of went sideways. But look, I mean, it's just an easy way to spot turning points. Bit of an interesting one actually. I wanted to show this one, Microsoft. As you can see here, if we go all the way across, this is interesting because look, a high was set there. You could argue we had a failed breakout, false breakout, whatever, but we had a low there. So you can see that it can be quite slow, like you would have wanted to be way out before there. So that's something to consider when you do look at these high time frames. But in this instance, look at that, the crash there. You would have got back in on that candle, longed, and then back there. So look, I mean, I think it works quite well if you use a weekly. Well, let's give it a try actually. So if we have a weekly market structure break on Microsoft, let's go here. So if we wait for, does that close above? Yeah, if we go on to the daily, and if we just back on to the weekly, we've put our stop loss there. Quite a wide stop, so you could easily make an argument to make a tighter stop. You could even argue, could put your stop there, could put your stop there. But now let's just long until we have a daily market break. See if it goes any longer. You will get some more chop on this one, but it could be a better exit. Let's have a look. Just a way of showing that sometimes it is really good. Oh, there we go. Avalon there. Would have been out, but you could have had a tighter stop, maybe below that low there. Nice little trade. Quicker as well. And yeah. Always, I think, for these things, you do want to maybe go on the lower time frame for execution because you can capture a bigger trend and you can have a tighter stop. But yeah, in this video, I just wanted to break down the easiest way to spot turning points in markets. It is a weekly market structure break. So simple, so effective. When you see one, especially with high volume and like a full body, you know to be worried, you know to be scared. So thank you very much for watching, guys. I do have a free newsletter, so please sign up to that below, and I will see you in the next one.